I am so excited to have Nat Bullard on the show, who is a climate analyst and advisor. Thank you so much for joining me.
Amber, thank you for having me. It's great to see you again.
Yes, so I have a funny story. If you remember when we met, it was in the spring of 2019. We were at a convenience store event, I believe, in North Carolina,
That's
if
right.
that sounds familiar. What you might not know is I had just come from a similar event in Western Canada. And I remember at the time when I was speaking at that event in Western Canada, the organizer said to me, don't talk about our energy transition. Nobody wants to talk about any type of green tech, so just stay away from that. I came to North Carolina and everybody was talking about our energy transition and green tech. So it reminds me, and this is perhaps my first question before we get into the state of decarbonization in 2025. I think people struggle a little bit to face the climate realities that we need to face right now. Has that been your experience as well?
Well, I think that I think that we have a challenge in that a lot of what is reality seems very abstract. Like levels of carbon dioxide in the atmosphere is not something that we as people really encounter in any kind of lived experiential way. What I will say is that we start, I think, to experience the result of all of these sort of atmospheric molecular things in real terms. We experience them in extreme heat, which is what you would expect when you hear something about a warming temperature. But we also experience them in terms of extreme precipitation or drought, or, and this is certainly all over North America, but also Europe and Southeast Asia and Africa, extremes of every kind. So extreme weather that is not just at the sort of the high end, but the low end as well. We're basically just entering a much more dynamic world in terms of the manifestation of all of the things in climate than I think what people are used to. It's one of the things that I find challenging to talk about. I agree with you in that sense. It's not something that people necessarily want to talk about. And I don't think it's because they're sort of shirking the idea, that they're sort of skeptical of it, but more that it doesn't seem very apparent. But I think these days that's become much more apparent. Ask anybody in North America what they're experiencing weather-wise and if it's normal and what they expect. And that's you'll get a different answer than what are they experiencing in terms of climate change, let's say.
Well, let's talk about your 200-page presentation, which you just unveiled. It's the 2025 version, State of Decarbonization. At the beginning of your slides, you do talk about those indicators, like you mentioned. You
Mhm.
talk about 2024, of course, being the warmest year on record. You talk as well about the flowering of Kyoto cherry trees over the past 1,200 years. And the list of those indicators goes on and on. So I would love for you to really summarize some of those indicators that you've included in those slides.
So I put together a list of things. And thank you for asking about this because they're very disparate. They're all over the place, and I did that on purpose, so that we're not just saying, "Well, this is what I'm experiencing in my particular life or in my location," and therefore other people might be experiencing something different. And so I looked across all kinds of geographies in terms of this. Yes, the Kyoto thing for those listening is one of my very favorites. The monks in the temples in Kyoto in Japan have been keeping a record of when the cherry blossoms blossom. And they're highly attuned to temperature. And what you can see is that the day of the year when they're in full flower has been pulled forward by about 20 days over the course of the last 1,200 years, meaning that it's warmer earlier in the year. The time when they hit that temperature when they can bloom is there. I love this because it's a very deep data set. It's been very diligently collected. But then there's similar things like in India, for instance, where the companies that are in the Indian stock exchange, when they have their earnings calls, have to talk about all the kinds of material risks or opportunities that they're encountering as companies. And one of the things that has come up in the over the summer this year were mentions of extreme heat or heat wave in the company transcript. So when the chief executive is talking to his or her investors in the Indian stock exchange, they're saying, "Look, we have a material impact on our business from extreme heat." There's another factor that had come in from the Lancet, from a medical journal that was looking at the number of hours of work that had been lost due to extreme heat over time, and it's just like it was in the hundreds of billions of hours across the human population. I think these are useful and sort of relevant to just say, and I always put them out in a sort of a no judgment way of saying, like, these are the impacts that we're feeling right now in people's experience and in their life, and also in their business, not just in saying, oh, it's hot today, but saying, look, we actually had a challenge to the way that we did our business in the last quarter because of extreme temperatures.
That is one of the things that I think is sort of strangely reassuring about your slides is that we're so used to seeing opinion and people's hot takes, and it is somewhat refreshing just to see that data on paper. Before we move on from the indicators, how do you choose which ones to include? Because I imagine there are quite a few indicators.
So I have 200 slides, as you noted. I start my process of sort of really building the presentation in about October or November with at least double that many. So with at least twice as many of those slides, and that's because I see something, I grab it, I put it in, and I say to myself, "That's interesting. Let me do two things. One, let me revisit it later on." So a lot of times this is data that's halfway through the year or something. And then two, when I revisit it, is it something that I feel like is part of a trend or part of a high signal that I want to include with other things? So it's funny. It starts off as a kind of very random process and then eventually becomes very selective. And I appreciate your point there because I make a point of being data driven. Lots of people say they're data driven, but what they might actually mean is that they're leaning heavily on a forecast or a projection, i.e., thinking about the future. You'll notice in my slides that I have almost nothing about the future unless it comes from a government and it's only looking forward a couple of years, or it comes from like an official forecasting institution. So I'm just trying to capture the clearest possible view of where we are at the moment. Like, try to get a good view of the present as a way of helping us think about the future.
You absolutely do that. And you also go back a few years. One of the things that I was noticing within the slides is the attention to the year 2021. Many notable things happening this year. I have a quick list as far as a surge in ESG roles, also carbon dioxide removal companies. Can you talk a little bit about why 2021 was a pivotal year?
So I've got a good friend here in Singapore where I live, who's an early stage investor. And she and I were talking late last year, and she's like, did a bunch of things happen in 2021 all at once that we now see sort of the trend for those reversing? And I said to myself, yes. And then I went back to make sure to check the data and see that that was true. And the answer is it was true. That was a year in which we had it's sort of a complex, I would say, complex reason for a lot of things happening at once in the world of energy and climate. One is that we were in a really impactful year still of the COVID pandemic, which had pushed down demand for fossil fuels. It had pushed down, as a result, global emissions. It gave people, I think, the sense that we might be in a position to do some really materially different things in our energy and climate system. Two, it was the last real year in which, for most of the world's major financial markets, the cost of money, so interest rates were still extremely low. And so that informed a lot of decisions that people made. And then the third is that there was a lot of strategic push within finance and big businesses around things such as environmental, social, and governance, or ESG. And that, I think, attracted a lot of capital to strategies that were built around that. So yeah, I have like several dozen slides here that are all about things that peaked that year. And they're everything from the funds, the funds in a particular ESG related mutual fund, or the shares rather, to the number of companies in the carbon dioxide removal space that had been founded in a year, to various corporate commitments that had been made about doing this or that or the other activity to decarbonize. And what we're seeing now is, first, it's now 4 years past that point. We're in a very different capital environment. Money costs something now, to put it very plainly. And finally, companies who have had to implement these things from the sort of theory that they set out in 2021 to practice are finding that some of them are very difficult to do. And some of them might not actually live up to what people had anticipated or expected. So yeah, I had fun with that one. It's the section that I think I get the most questions about and sometimes the most pushback, but only because I oriented it entirely around this idea of a year being an important theme, as opposed to what's happening in transportation or what's happening in building power infrastructure or something like that.
Does it worry you at all when you are doing your research and you see these trend lines and you think, oh, well, are people starting to turn their back on some of these ESG efforts? I mean, does that induce anxiety? How do you feel looking at the data altogether in terms of where we're at today in 2025?
So it's a really good question because you have to look at two sides of the data that you have. One is, you might have a decline in ESG role hiring in certain, in certain financial markets like New York City. But at the same time, the number of assets under management that have an ESG strategy, so within mutual funds or exchange traded funds, just keeps going up. The amount of capital that's devoted without an ESG related lens to it to building energy transition infrastructure is almost $900 billion. It keeps increasing. So there's this, in my sort of spirit of theory and practice, you have a move from these kinds of things that are largely at the announcement level or might be more about committing an idea rather than committing money, moving one direction. But then the capital that's been devoted is going another direction. So last year was the first year, for instance, with more than $2 trillion of investment in energy transition activity, 90% of which is going into things like building renewable power, building and selling electric vehicles, and building the global power grid. So like the trends on real investments just keep on going. And I think in a healthy way, completely separate from any particular strategy around ESG. And in fact, most of the investors that I know who do infrastructure or who do climate technology do not particularly have an interest in affiliating with something like ESG as an idea. What they say is, I'm investing in long-term technological trend. I'm investing in the long timeline of how businesses are going to reorient themselves and make and create new, big, durable companies, rather than saying this is sponsored by or inspired by something like ESG as a strategy.
When we think about trends as well, I wanted to ask you about AI. DeepSeek as one example. I know as someone who goes out and keynotes a lot about artificial intelligence, one of the questions I get asked a lot is, what about all the energy use at data centers? What effect is that going to have? Can you talk a little bit about that for people who are concerned?
It's really fascinating. And I'm glad to be speaking about this with you, given that you do keynotes on this all the time. One of the things that we've seen, both of us in our careers looking at this, is that it's gone from being something that just sort of happened. I mean, companies have been doing artificial intelligence and research and machine learning and deep learning for quite some time. But now it's sort of elevated to the level of infrastructure, literally needing to go build billions of dollars, or really hundreds of billions of dollars a year at a time in order to support all of this activity. And it's a full stack of things. It's everything from building NVIDIA chips, which I think are very easy for people to understand and see, all the way to building new physical structures and then building the power infrastructure that goes into them, securing the land, securing the water that you need to cool all of these systems. And it's a real demand driver of both infrastructure in the United States and in Canada and elsewhere, but also a real driver of demand for electricity. So, in North America, we've not really had a lot of growth in demand. We've become more efficient over time. Our economies are not as heavily industrialized as they used to be. And so our demand has generally been trending down, but that's reversed pretty quickly in the last couple of years. The expectation is now that it's going to be growing and growing in a way that it hadn't before. So this is why two things are really important. One, the capital investment announcements. Google just invested an expectation to do more than $70 billion worth of capital expenditure this year, most of which is going to go into data center infrastructure. And then to also look at things such as the DeepSeek model, which has similar characteristics in terms of performance as some of the foundation models that we see developed elsewhere, but uses much less energy in the training process. And so that kind of changes the narrative of like what amount of energy is needed to get the same kind of outcome. I think it's a great, healthy challenge for the sector to look at that. But I also think that it's not entirely clear that that changes exactly who's building what for now. It has the potential to leave us with a great deal of overcapacity in the long run. But at the same time, it's not like overcapacity doesn't get used. It just gets priced differently and utilized differently. If you go out and build a billion-dollar data center and you no longer need it for training models, then you might use it for what they call inference, for running models, and then providing that service at lower cost to all of the people that want to use the result of a model rather than train a model.
When we're speaking about DeepSeek, it seems like a good opportunity to bring up what's happening in China right now, because that's another noteworthy thing that was in your slides, that China is now the world's largest oil importer, but also the largest deployer of renewables. This might seem very confusing for a lot of people, so I would love if you could just unpack this.
I appreciate this because China is kind of the biggest of everything that you encounter. It is by far the world's biggest emitter of carbon dioxide from industrial and economic activity. It is the biggest importer of oil. China now imports more oil than all of Europe. It is the not the biggest consumer of natural gas, but one of the world's biggest importers. It is by far the world's biggest consumer of coal. And at the same time, it has by far the biggest deployment of renewable electricity. It has by far the world's biggest fleet of electric vehicles and is increasingly a huge exporter of electric vehicles. It looks like its demand for some of its really, really heavily industrialized activities, like steel production, has already peaked, and therefore, with that, a peak in emissions from steel making. It looks possible. I wouldn't want to call it completely, but it looks possible that its demand for oil has peaked as well. And so you have this fascinating condition where like it's the most of everything and the biggest of everything. But one of those sets of the ledger, one of those sides of the ledger rather, might be peaking in terms of its activity. And with it, we could see potentially a peak in emissions in China. And it's not just that China is the biggest, but it's also been such a source of growth for all of these activities too. And if that changes, then that does have a change in the trajectory for everything. But I mean, China is pretty extraordinary. I live in Singapore, and we have a great data on the vehicle market here. It's not a very big market. It's about 40 something thousand cars sold a year because this is not that big of a place. But you can download the data from the government website and take a look at how many cars from which companies are being registered every year. And in December of 2021, BYD, the Chinese electric car maker, had 0.2% market share in Singapore. And in December 2024, it had 14.4% market share, which means it was second only to Toyota. So it had, in the course of a year, gone past all of the Germans, all of the Korean makers, and all of the Japanese makers except for one. And it's a great car. My building is full of them, and they're priced competitively. They're very new. They have fresh designs. They have great technology in terms of the battery and the powertrain, which is obviously one big concern, but also good technology in terms of the experience as a driver. And so these are factors and forces that we're going to see everywhere. I spent a lot of time, as you could see in the deck, talking about China's share of the auto market, and it's one thing that I keep going on and on and on about. China makes about 40% of the world's cars right now, which is pretty remarkable. Uh, for those of us in North America, we're actually somewhat insulated from it because of how integrated our markets are with each other and how much of our own demand we meet. But for the rest of the world, this is a huge challenge. I mean, when I go to other parts of Southeast Asia, I see ads for Chinese pickup trucks everywhere, and I see drivers in those pickup trucks as well.
When we look at the world and we think about some of the risks that we face today, a chart that, sorry, it's not in your presentation, but I use it often in my speaking events, is the World Economic Forum and their global risks. And one of the things
Mhm.
that strikes me when I go through those risks, especially for 2025, is that the risks really include disinformation and misinformation, societal polarization, and climate risks. Those have kind of topped the charts for the past couple of years and continue to do so in 2025. I guess that worries me. Maybe I'm spending too much time online. But when we have these conversations about decarbonization and I see your charts and there's so much data there, I want everybody to read that. I want everybody to see it. But I worry a little bit in this age of misinformation and disinformation when it comes to decarbonization, that it's sort of this information war that I'm not sure can be won. Does that worry you at all in terms of the polarization we're seeing online right now?
It does because to some extent, people have sort of chosen their own concept of a reality around the information that's there, which is one of the reasons that I tend to go insofar as possible for peer-reviewed scientific sources, official sources from government or non-government bodies, and why I also use things that have already happened. Like I find it helpful to look more clearly at where we actually are than to sort of try to project people into the future in terms of saying, well, this it's inevitable to happen. And the reason for that is because you inevitably end up in arguments about it, saying like, well, I don't think that's going to happen, or that's not what I am experiencing or seeing. And there is one there's one sort of neutral element of this, which is that everybody's experiences are different. Depending on which state or province you live in, you have a different apprehension of climate change compared to somebody else, even your neighbor. That's one thing. The other is that it may not be you may not like the findings that are there, and so you sort of argue against them. But I don't know. I find that there is a large number of people who are willing to engage in good faith, but there's also people who have an interest in getting it right, who pay a lot of attention to where we really are. People in the financial community, and not everyone, but a large part of them, and certainly people in the risk community, so insurance as a part of that financial community, are deeply, deeply invested, literally, in getting this right. The challenge, of course, is that getting it right might mean things such as places become uninsurable in the private sector. Certainly something that we in North America know is a risk, and something that worries me because there's not an immediate solution towards it besides really having the government provide a backstop to all of that. But wherein that activity becomes polarized or politicized, that's a challenge.
So, just a couple more questions for you, specifically around government. What is the role of our political leaders? How involved should they be right now? And are you optimistic about the role that they have in terms of change, or should we be looking more to industry? Just kind of talk us through that piece.
So I think that especially in North America, we live in this kind of comfortable fiction that markets determine, how our big complex systems work. But that's true in terms of a lot of elements of how transactions happen and capital flows. But every big market for anything that we use as a utility, whether that's electricity or water or telecommunications or related things such as oil and gas and gasoline and petrol, are highly regulated because governments have an interest in getting them right. They have an interest in making sure that they're reliable, affordable, ideally, and widely available. So that's something that people I think can sort of in North America in particular think about as though the government has no role in that, but that's really not true. Uh, then the government can also have a very big role in deciding where policy moves things, in deciding where we want to prioritize investment, what in addition to being reliable and inexpensive, we want our energy to be. I do think it's possible to sort of overload these with complications and things that the old energy world didn't need to think about, which is like what kind of hiring do you need to have? What kind of distributional effects do you need to have? Those can make things complicated and more political, I think, than might be ideal. But then there's also elements of government involved in how much dependence do we want on foreign sources, right? How much dependence do we want on foreign buyers? Similarly, these are flip sides of the same coin, and these are political decisions. They're also policy decisions. They're also security decisions, and so they can become really complicated. And there's not necessarily easy answers for them. And so my hope, in a sense, is that we all learn to communicate a little bit better about all of these things. In particular, in North America, we have the great benefit and the great good fortune of markets that generally work and systems that generally work. And so I think it can lull people into not necessarily making a lot of decision or not necessarily making a lot of conscious decisions about what needs to happen or where or why or by whom.
Is there anything within this 2025 report that you've done that you think is an indicator perhaps for a 2026 report? I'm not asking you to give me a prediction, but do you see where things are going in 2025? Is there something that's come out of that where you think, okay, this is a trend to watch?
I do want to watch very closely what happens in building for AI, which I don't actually have an answer to yet because I can't really see the prediction. As I said, Google's earnings just came, Google's rather projection for its capital expenditure just came out, and it's been raised by more than $15 billion a year. So certainly those companies are not seeing any immediate pullback in what they plan to do. I think it'd be very interesting to see on the margin what kind of decisions get made about where people decide to do their AI training and what that implies, and where people go when they do need to build. So, in the United States, for instance, so much of the world's, not just the US, but the world's data center capacity is clustered in Northern Virginia for a bunch of reasons, some of which are historical, a lot of which are sort of convenience and infrastructural logistic reasons. Where are they going to go next? Like you start to run out of space physically and metaphysically within Northern Virginia to do these things. Where are people going to go?
Mm-hmm.
And when they move, what kind of decisions are they making in terms of who they partner with, who they build with, when those things are going to happen? And so that's something that I'm going to be watching very closely. Not a prediction, but my on my radar, let's say.
Excellent. Well, listen, thank you so much for spending so much time with me. It's great to see you after all these years, and thanks so much for joining me on the show.
Thank you, Amber. This was a treat, and thanks for having me.